Hi, then we welcome StrongPoint with the CEO Jacob Tvarabak. My name is Frederick and I will moderate the call. For those new to StrongPoint, it's a grocery retail technology company that improves store operation and shopping experiences. It holds a wide product range, including shelf labels, self-checkout solution, grocery lockers, in-store and dark store pricing solution, and cash management solutions, and much more. In addition, it is an outstore partner, and by that I give the word over to Jacob.
Thank you so much, Frederick. Happy to be here and to allow me for the opportunity to present StrongPoint better. If you can go to the next page, then maybe I'll just jump straight at it, because StrongPoint's purpose is to infuse retail technology in every shopping experience for a smarter and better life. And the reason why we said that is twofold. One is to improve the operations of the grocery retail, improving the efficiency in particular, allowing the retailer to boost their margins, or alternatively, lower prices, which is very popular in today's macroeconomic climate, to attract consumers. And exactly the other part, of course, is then impacting the end consumers, both improving the shopping experience, but also making that making the shopping experience come at a lower cost if and when grocery retailers decide to let off some of the efficiency savings go to end consumers. On the next page, just to give any new listener a very short glimpse of what StrongPoint is. We are we have our headquarters in Norway, but we're traditionally a Nordic-based company. We have grown now into 9 countries. That is Norway, Sweden, Finland recently also, the 3 Baltic states, UK, Ireland, and Spain. And in these 9 countries, we offer not just the sale of solutions, but the sale, installation, service, and support of solutions, which is vital to both get the necessary performance of the solutions we offer, but also to reap the benefits short term, but also long term, thereby building a close relationship with the grocery retailer. We had last year about 1.3 billion Norwegian kroner revenue, and I believe today the SEK-NOK conversion is about 1.0, so that makes it easy. You would see that 80% of the revenue that we have stems from grocery retailers. And we serve all the grocery retailers, and I mean all, in Norway, in Sweden, in the Baltic countries, and in Finland, with one exception, that being Kesko. But so we serve all the grocery retailers, and we're starting to penetrate the UK and Spanish market, and we'll talk a lot more about that later today. We have about 500 employees and have been listed on the stock exchange for 20 years, although our history goes even further back. So we're not a new kid on the block in that respect. Can they go to the next page, please? I will, well, Fredrik, you did a great list of some of the solutions that we offer, but instead of going into detail right now on all the solutions we offer, I'm assuming that most listeners are Swedish. And if you ever shopped online in Sweden, our solution would have been in use, whether that's the fulfillment of orders or the order picking solution, picking the orders or the groceries for the order in store or in dark store, or whether that's going to an Inga store and picking it up from a grocery locker just outside the store. Similarly, if you go to the grocery store, we are predominantly having own solutions, but we also have a couple of partnerships, of which Pricer, the Swedish company, is known to be one of them. We're offering the Pricer electronic shelf labels in stores. You would have seen them in most stores in Sweden. We also offer our cash management solution, and you would have seen our solution if you were to buy any kind of tobacco or pharmacy products in using the Vensafe solution instead of a manned solution. So I think that's the best way in just 1 minute to explain what our StrongPoint really offers today to grocery retailers and how you as end consumers are being impacted. Surely there's a long list, and you would see that we also have a portfolio which is tailored also for the future, of which we're very proud of the AutoStore partnership, as you mentioned, Fred. If you go to the next page, then we are really focused on grocery retailers. I said about 80% of the revenue we have stems from grocery retail. And that is deliberate, not just because the solutions are very specific for grocery retail, but also because it's a resilient market. In today's environment, it's important for us to underline that we're not just targeting retailing large. You've seen a number of retailers, non-discretionary spend retailers, having a bit of a struggle. But grocery retailers have and are relatively stable. Sure, low margins, but big volumes, making sure these are very, very solid customers and as such good payers. We barely have any sort of losses on any outstanding payments. So very resilient market. The second thing is that if you contrast with other retail, the grocery retailers are having the by far biggest spend. We recognize some 3/4 of the total retail spend in the tech spend in the retail space to be attributed to grocery retailers. And then lastly, we're seeing that the increasing penetration of technology in grocery stores or grocery operations is almost inevitable. We're seeing that with, electronic shelf labels has been and is an important part in the Nordic countries. Now we're seeing that coming out in the rest of Europe and the world. We have self-checkout solutions, of which StrongPoint is very proud. Again, for the Swedish listener, those are not our solutions you see in the supermarket, but I can assure you that our self-checkout do not stand behind anything, and with our newly integrated artificial intelligence to item detect what's on the scale, it's also a very, very effective theft prevention for retailers. But in general, technology is growing in importance for grocery retailers. So with this, everything should be very clear, no clouds and tailwind and what have you. Unfortunately, that's not always the case. And so if you go to the next page, you'll see that in our short-term results that we've delivered over the past few quarters, we've had a bit of a challenge. The revenue has actually come down, and we've experienced a profitability squeeze, which has led to 2 consecutive quarters now with negative EBITDA. And the negative quarter has never happened in my time at StrongPoint, which is now 6 years. There are principally 2 reasons why we've seen this happen. One is that in Norway and Sweden, which constitute a little bit less than 50% of our revenue, we've seen a investment halt or a postponement of investments. To some extent, you can understand that because over the past 2 or so years, both the Norwegian kroner and the Swedish kroner have been depreciating versus USD and Euro. And so what that means is that when we have been importing solutions like the self-checkout solution, like the electronic shelf labels, like any kind of solution which involves hardware, that has all of a sudden become just a lot more expensive because of the depreciation. When you combine that with cost inflation and a general consciousness in the society, and in particular with grocers, of keeping cost control, that has prohibited us from increasing the sales in these markets. Short term, we hope. The second thing that's happened is that we did in 2022 a acquisition into the UK and Irish market. We believe that's a very successful acquisition, and we experienced some fantastic growth with that acquisition in the UK market following COVID. But that said, we did also realize that the old management wasn't fit for purpose when we were growing the solutions that we had to offer on top of what the business that we had in the UK was offering. And that has also impacted us. So over the past 6 months, we've taken two very concrete actions. One being a cost reduction of 45 million, which we are well into doing. So that's a 45 million per annum cost reduction effort. And it's also a reorganization of teams, a reorganization of teams to create both more commercial power, but also to share more best practices across countries where that makes sense. We go to the next page. And this is important and happening sort of under the surface of something which is, as we just saw on the previous page, doesn't look great. Actually, we've had two of the, I would call it, the most significant events in the history of StrongPoint. First is the Sainsbury win. To put this in perspective, Sainsbury's is the second largest grocery chain in the UK. They are some 4 times bigger than Norgesgruppen. Again, for Swedish listeners, ICA is about 150 billion. If you exclude the pharmacy and the Rimi, then ICA stores is 100 billion SEK. So we're essentially looking at a company that is 4 times bigger in terms of revenue. And we are now delivering the order picking solution for Sainsbury's. We're in the process of doing that. And that's a big thing. The UK market is the by far highest penetrated e-grocery market in Europe. Sainsbury alone has 14%, so 14% of its total turnover through e-commerce. And all the food, all the groceries that's going through there is going to be handled with StrongPoint's order picking solution. So that the exact same solution that Axfood and Coop and others have been using is the same solution we'll be now applying with Sainsbury's. That's number one. That's a big thing for us. The second thing is the win of Mercadona, or notably that the installation of a new, and we would call a revolutionary, cash management solution to Mercadona. Mercadona might not be that well known to Scandinavian consumers or investors, so let me help you out. In addition to being about the same size as Sainsbury's, this is by far the biggest grocer in Spain. 26% market share, and the second on the list is Carrefour with 9%. So this is the by far biggest, and it's also one of the, if not the fastest growing grocery retail chain in Spain, and now also Portugal, with more than 1,600 stores. A soft discounter with what we as Scandinavians, certainly Norwegians, would label as high-end, fantastic offering, in particular on the fresh products. These two we now landed in Q1 and Q2, and we are in the process of delivering on these massive wins. So despite all the sort of fuss and importance, of course, about the short-term profitability, these massive wins have taken place just in the last 5 months. So if we go to the next page, I mean, the importance of these two projects are first and foremost important because they're just big in size in and of itself. But secondly, when we've taken the top 10 grocery customers that we've been serving over many, many years now in Norway, in Sweden, and in the Baltics, we typically see that our customers are not just buying one solution. They're actually buying on average 4.7 solutions. And this makes sense from two angles at least. One is that, by starting to serve a customer, we're gaining the trust with that customer. It's a lot easier to buy from someone that you already know, has delivered quality, and that you know by person. And by the way, you're also in the purchasing departments, the databases. The second is that we're able to offer solutions that would increase the value of the solution you already acquired. So let me give you an example. In the case of buying or purchasing our order picking solution, by having, say, electronic shelf labels and applying the pick by light functionality you could use using the flash on the electronic shelf label, you're increasing the speed of the picking. So you're essentially creating an ecosystem where 1 + 1 does not just make 2, but more than that. Same goes with lockers. And so the list goes on. And if you click one more, that's of course the inspiration or aspiration for these two major customers, Sainsbury's and McDonald's. Notably, you'll see here we have two on Sainsbury's already, where we have been serving Sainsbury's for many years through the UK entity that we acquired. And I believe actually that important reason why StrongPoint won with its order picking solution is also because they have familiarity with StrongPoint ALS, the UK entity, in supplying shop fitting services and engineering services. So this is the second sort of value pillar of these two major customers. It's actually growing the number of solutions with them. If we then go on to the next page, and we start taking a bit of a view of what are then opportunities in key markets. Certainly in our traditional StrongPoint markets, we have close to 100% penetration. As I said, it's really just Kesko we are not serving. So the growth, the white space, if you want, is not from adding one more grocer. It's more about increasing the penetration of solutions. And again, even though we tend to sort of think that, well, we are so mature already in these markets, there is still ample opportunities. Although you will see to use the Swedish grocery retail market again, although you will see our e-commerce solutions many places, there's still ample opportunities for a lot more grocery lockers, as an example. Electronic shelf labels, it's far from penetrated, even in Sweden. The penetration in Norway is a lot higher than in Sweden. Why is it not coming more in Sweden? And we believe it. We believe that it is happening absolutely the same. And to finish up Sweden in that respect for of opportunities, the self-checkout solutions, which are growing in popularity, we have developed our own hardware and software with a very, very sophisticated artificial intelligence, which is being utilized to avoid theft prevention in our self-checkout. I mean, we strongly believe this will be making its way into the traditional StrongPoint markets, Norway, Sweden, when the next cycle of investment is happening. But of course, the really big growth areas for us are Spain and UK and Ireland, on also the back of Sainsbury's and McDonald's. So I said, the project in themselves with Sainsbury's and McDonald's are big. Number two, we absolutely hope to be growing to 4.7 number of solutions and beyond with both those grocery retailers. But thirdly, there's also a big white space in terms of grocery retail chains that we still haven't properly touched. Of course, when you win with the number one and number two in its respective markets, that's also catching attention, raising eyebrows. And so we're just seeing that the level of seriousness, the level of responsiveness to any kind of outreach with these two clients in our pockets is better than ever before. And we also believe we have absolutely the right solutions for these markets. Otherwise, we wouldn't be there. So to round things off and give you some questions, time for questions, Fredrik, maybe if you go to the next page. In short, why invest in StrongPoint? Well, first of all, it's grocery retail, not retail. That's a resilient business, absolutely, and we believe that will remain a resilient business. Number two, we have a great deal of growth opportunities in existing markets, also in the traditional StrongPoint markets, but surely and to an even bigger extent in the very large UK and Spanish markets. And lastly, not investing in new technologies is not really a option. So one thing is buying the solutions today, but the solutions for tomorrow that we also represent will absolutely be something that grocery retailers and our customers will be asking for in the future. Thank you.
Thank you so much for your presentation. Time is running out, but I think we have time for at least one question. And you spoke about customers like pushing out their investment decision given the macro uncertainty. And how do you see the second half of 2024, the macro conditions?
Yeah, I mean, like there are indications that that the market is improving. I mean, certainly inflation is starting to come down. It's yet to be seen how the NOK and SEK will react.
Yeah.
But there's these are typically postponements. So it's like with I'll give an example, a concrete example. It's like with electronic shelf labels. Once you've invested in electronic shelf labels, you're very, very unlikely to go back to paper tags. Right?
Yeah.
And in Norway, right, we had just prior to some 6 months ago, we had a very large order of electronic shelf labels for an existing customer. Of course, not going back to paper tags. So I think a lot of the investments that have been pushed on them, they kind of inevitably need to happen, in particular when they've been hardware driven. And if they're not hardware driven, it's typically on a SaaS model, which is more recurring of nature. And we have actually about a quarter of our revenue being recurring from licenses or software services. So yeah, I mean, like we expect and believe that there are indications that could signal that the latter half of this year will be better than the last 6 months, I believe.
Yeah, thank you. It seems like we don't have time for any more questions, but thank you so much for your presentation.
Thank you, Fredrik. Thank you all.